Are you ready to make your money work for you? Investing $1,000 can be a game changer, but knowing where to put that cash is crucial for maximizing your returns. In today's video, we'll explore the top 7 ways to invest $1,000, each with its own unique benefits and potential for growth. Whether you're a seasoned investor or just starting out, these strategies will help you navigate the investment landscape with confidence. From traditional options to innovative approaches, we'll cover a diverse range of opportunities that can fit any risk tolerance and financial goal. By the end of this video, you'll have a clear understanding of how to make the most of your $1,000 investment. So if you're eager to discover smart, actionable ways to grow your wealth, stay tuned as we dive into the top 7 ways to invest $1,000 and maximize your returns. Number 7, Cardano. Cardano stands out for its strong focus on sustainability and scalability, utilizing a unique proof-of-stake consensus mechanism that sets it apart from many other cryptocurrencies. Founded by one of the co-founders of Ethereum, Charles Hoskinson, Cardano aims to create a more secure and scalable blockchain. Its layered architecture allows for smart contracts and decentralized applications, making it a versatile platform for developers. While it has made significant strides in the crypto space, its slower development pace compared to higher-ranked cryptocurrencies like Solana means it ranks at number 7. Cardano's commitment to academic research and peer-reviewed technology gives it a solid foundation, but it still faces challenges in adoption and market competition. Unlike Solana, which boasts lightning-fast transaction speeds and lower fees, Cardano prioritizes security and sustainability, appealing to investors who value long-term growth over immediate gains. This unique approach, combined with a dedicated community, positions Cardano as a promising investment, albeit with a more cautious trajectory compared to its higher-ranked counterparts. Number 6, Wealthfront. Wealthfront is a popular robo-advisor known for its user-friendly interface and automated investment strategies. It offers a range of features, including tax loss harvesting and financial planning tools, making it an attractive option for beginner investors. Wealthfront's unique approach to investing focuses on low-cost index funds and ETFs, which helps to minimize fees and maximize returns over time. However, it ranks at number 6 due to its limited investment options compared to higher-ranked competitors like Betterment, which provides more personalized financial advice and a wider array of investment choices. While Wealthfront excels in automation and ease of use, it may not cater to those seeking a more hands-on approach or customized portfolio management. Additionally, its lack of human advisors can be a drawback for investors who prefer personalized guidance. Despite these limitations, Wealthfront remains a solid choice for those looking to start their investment journey with a straightforward, automated platform that emphasizes efficiency and cost-effectiveness, making it a reliable option in the ever-evolving landscape of robo-advisors. Number 5, Vanguard Total Stock Market Index Fund, VTX. Vanguard's Total Stock Market Index Fund is a powerhouse in the world of index investing, offering broad exposure to the entire U.S. stock market, including small, mid, and large-cap stocks. With its low expense ratio and a strong track record of performance, VTSX is a favorite among passive investors seeking long-term growth. However, it ranks at number 5 due to its lack of international diversification compared to higher-ranked funds like the Fidelity Global ex-US Index Fund, which provides exposure to global markets outside the U.S. While VTSX excels in capturing the overall performance of the U.S. economy, investors looking for a more balanced portfolio may find it lacking in global reach. Additionally, the fund's performance can be heavily influenced by U.S. market fluctuations, which may not suit those seeking a more stable investment across various economies. Despite these considerations, VTSX remains a solid choice for investors who want a straightforward, low-cost way to invest. Number 4, Prosper. Prosper is one of the pioneers in the peer-to-peer lending space, connecting borrowers with individual investors looking to earn attractive returns. With a user-friendly platform, Prosper allows investors to fund personal loans for various purposes, from debt consolidation to home improvement. Its unique feature is the ability to choose loans based on risk grades, enabling investors to tailor their portfolios according to their risk tolerance. However, it ranks at number 4 due to its relatively higher default rates compared to higher-ranked platforms like Lending Club, which has a more extensive borrower vetting process and a larger loan volume. While Prosper offers competitive interest rates and the potential for significant returns, the risk of borrower defaults can impact overall profitability. Additionally, Prosper's secondary market for selling loans is less liquid than that of its competitors, making it harder for investors to exit their positions quickly. Despite these challenges, Prosper remains a solid choice for those looking to diversify their investment portfolios with peer-to-peer lending, offering a blend of accessibility and potential rewards in the evolving landscape of alternative investments. Number 3. Marcus by Goldman Sachs High Yield Savings Account. Marcus by Goldman Sachs offers a high-yield savings account that stands out for its competitive interest rates and no monthly fees. With a user-friendly online platform, Marcus provides easy access to funds while allowing your savings to grow at a faster pace than traditional savings accounts. One of its unique features is the lack of minimum deposit requirements, making it accessible for savers at any level. However, it ranks at number 3 due to its limited banking services compared to higher-ranked accounts like Ally Bank, which offers additional features such as checking accounts and robust customer service options. While Marcus excels in providing a straightforward savings solution, it may not cater to those looking for a more comprehensive banking experience. Additionally, Marcus does not offer ATM access, which can be a drawback for those who prefer immediate access to their funds. Despite these limitations, the Marcus High Yield Savings Account remains an excellent choice for individuals seeking a reliable and high-interest option to grow their savings with minimal hassle, making it a strong contender in the high-yield savings landscape. Number 2. Fundrise. Fundrise is a leading platform in the real estate crowdfunding space, allowing investors to access a diversified portfolio of real estate projects with relatively low minimum investments. With a user-friendly interface, Fundrise offers various investment options, including E-REITs and E-funds, which provide exposure to residential and commercial properties across the United States. One of its standout features is the ability to invest in real estate without the need for significant capital, making it accessible to everyday investors. However, it ranks at number 2 due to its slightly longer investment horizon compared to higher-ranked platforms like Realty Mogul, which offers more immediate cash flow opportunities through its focus on income-generating properties. While Fundrise emphasizes long-term growth and capital appreciation, investors seeking quicker returns may find Realty Mogul's offerings more appealing. Additionally, Fundrise's fees can be higher than some competitors, which may impact overall returns. Despite these considerations, Fundrise remains an excellent choice for those looking to diversify their investment portfolios with real estate, providing a unique opportunity to participate in the real estate market without the complexities of direct property ownership. Number 1. S&P 500 Index Fund. The S&P 500 Index Fund is the gold standard for stock market investing, representing the performance of 500 of the largest publicly traded companies in the U.S. This fund offers unparalleled diversification, allowing investors to gain exposure to a broad swath of the economy, from technology giants to consumer staples. Its low expense ratios and passive management style make it an attractive option for both novice and seasoned investors alike. Ranking at number 1, the S&P 500 Index Fund consistently outperforms many actively managed funds over the long term, thanks to its inherent ability to capture market growth. Unlike other investment vehicles that may focus on niche sectors or individual stocks, the S&P 500 provides a balanced approach, reducing risk while maximizing potential returns. Additionally, its historical average annual return of around 10% makes it a reliable choice for long-term wealth accumulation. While other funds may offer higher short-term gains, the stability and proven track record of the S&P 500 Index Fund solidify its position as the top choice for investors seeking a... In this video, we explored the top 7 ways to invest $1,000, each offering unique opportunities to maximize your returns. We started with Cardano at number 7, highlighting its focus on sustainability, followed by Wealthfront at number 6, known for its automated investment strategies. At number 5, we discussed Vanguard's Total Stock Market Index Fund, which provides broad market exposure. Prosper ranked 4th in peer-to-peer lending, connecting borrowers with investors, while Marcus by Goldman Sachs took the 3rd spot for its high-yield savings account. Fundrise, at number 2, opened doors to real estate crowdfunding, allowing for diversified property investments. Finally, we crowned the S&P 500 Index Fund as the top choice, offering stability and long-term growth potential. Each of these investment options presents a pathway to grow your wealth, depending on your financial goals and risk tolerance. We encourage you to dive deeper into these strategies and consider how they can fit into your investment journey. Remember, the best time to start investing is now. Take action today and watch your financial future flourish.